Alright traders, I'm back with another video, and in this video we're going to look at silver dollar. Going to be a little bit quick because actually I'm pretty much going on vacation today, and I'll be away just for 2 days, little short vacation, and then I'll probably still be on vacation for a little bit, but I'll still be here doing stuff for you guys. But anyway, just want to look at this silver dollar real quick. There's a possibility for a trade set up here, but things have to play out the way that we're looking at. So we're looking at this chart here, and you could see this support and resistance level. Alright, so see this level, and it's going to be 15,70517. That's the level that I'm looking at, but I believe it's more of a zone. Okay, so price could drop deeper into the zone, and if I look at it as a zone, let me put another line on here. Just put this level down here. Let's see how relevant that is. All right, so that'll be the bottom of our zone, and then let's go see what that looks like. Okay, because you could see, so looking at the top level, you could see where it was support here, it was support there. It broke through and it fell down to this point. That's why I wanted to put this on the chart, because even though we have support here, we could still break through and fall to the downside, and there's some things that are kind of holding us from falling to the downside, and I'll explain it shortly. But look how in this zone you could see where price bounced off of the bottom of the zone, the bottom here. So therefore your trade setup or idea is all based on this zone. All right, so if you're thinking that the trade is here, well, maybe the trade drops a little farther and it's here, and then it could be here before we see price turn around, because that's what we're really looking for. We're looking for price to turn around because we have a strong support level here. You can see how strong it was just even back here. So that's 2016, May 2016. That's when this level was hit once at that point, and then we had 2016. Then we have here this year at July 2017. But if we go back farther, we could see where it was support even farther back. All right, October 2015, then even way back here. So this level is relevant. All right, so just knowing that it's relevant, we want to set up an opportunity if it gives it to us. So then looking at Ichimoku, there's also some things I'm looking at. Now you've been looking at trading inside this one candle, but I think it looks like we're breaking lower than that, because now we had a fractal here. All right, so this was our fractal at this point, but I believe we're violating that level, and we're making, this is now not a fractal probably when this candle closes, because it made a new low here. All right, so the thing I'm looking at is your flat Kijinsen and how far the distance is with Tenkan-sen Kijinsen. So Tenkan-sen's going to keep dropping with price. Your Kijinsen's flattening out. If we found the bottom here, and if this is a support level, you're getting a big C clamp here. So I don't think price is going to go way farther, that much farther from your Kijinsen, because you'll have such a big C clamp, and a C clamp is just like this basically. And when you see a C clamp, a lot of things could happen. So this looks like a C clamp, doesn't it? Don't you know what one of those C clamp tools are? Let me show you one. That's a C clamp. All right, and I call this C clamp because a lot of times you see that the market wants to get back to equilibrium, right? All right, because Tenkan-sen's getting too far from Kijinsen. They don't like to be that far apart from each other. And if you go through the charts and look, you'll see. So let's go through and look at a couple things. See where that really wasn't one right there. Really wasn't. And you're not going to see much of a C clamp, but see where Kijinsen flattened out, and the market got a little bit away from it and just pulled back a little bit. That wasn't really a big one there, but here's a little bit bigger, almost like we're looking at. So you might have thought this was the bottom, right? But you didn't have a flat C clamp. You didn't have a flat Kijinsen yet, but you did right here. It started getting flat. Once it got flat, you never really saw the market go lower. All right, it got flat. The market pulled back up to that level and went past that level. C clamp, not a big C clamp there, but a nice flat Kijinsen. Market's getting too far away from it. Let's look back even deeper, see some things. So here you go. This was a good C clamp, but look how hard it was to set the level, because you got flat here and then you made a new low here. But once you got flat, That was the low. And this trade would have been really hard to get into because look at how it was. A lot of indecision here. You go down to the 4-hour time frame and get into this, but you had a flat Kijinsen here, which attracted this back. It's almost like a magnet pulling it back, because Tenkan-sen Kijinsen do not like to be far apart. They love to hold hands and walk together, much like they are right here, just being lovey-dovey, holding each other's hands and walking together until one of them gets mad, as they did here, and takes off, and the other one says, please come back, and then they come back. The price pulls back. All right, so you could see the same thing here with flat Kijinsen. They didn't get super far apart, but flat Kijinsen, you could see what happens, what the market is doing. Then you had a nice move up here. Looked like you might have been getting flat here, but you had a little bit more. And then this was kind of like divergence with price and Kijinsen. And then you had a flat level here, and then you could see the market pull back to that area. So you see how Tenkan-sen and Kijinsen just don't like to be that far apart. Here's another example. Let's make this a little bigger because we can't see this. Okay, so you could see where we had the crossover, price took off, and then you got flat right here. And you had a nice rejection candle here. And price still went a little bit lower. It didn't take off and go back to the upside like you would have thought it would. And then it was a little bit tricky here. So this C-clamp trade probably here would have maybe not given you what you wanted, because the market was so crazy, and it did even go lower, but then eventually turned around. When you looked at this, you wanted to look and see if you had any divergence, and you did, but you didn't get that divergence until this point right here. And then you could see where that was still going to the downside. All right, so then you want to look to see if there's any support and resistance levels where you could bounce off of. All right, because that's when that divergence really kicks in. I don't pay much attention to that divergence until I'm at a support and resistance level. All right, and I think you could understand the process as far as getting away from Kijinsen and market equilibrium and the C-clamp. You see how far apart price is from this level here, and then finally it's going to attract back. So that's what you're looking for. Let's look right here. Let's try to look at this spot. So you could see here, this is a big C-clamp, and then you could see the flatness right here. We already found our top, and then the market's starting to drop even before the flatness of the cloud, because Tenkan-sen, Kijinsen too far apart, market disequilibrium, and then price pulls back towards that level and then goes even lower. All right, here's where a big, probably some news or something took it out of whack, because you had a nice move. This wasn't really a C-clamp. Market didn't get too flat, but price was getting too far from Kijinsen and pulled back to that level. All right. So now that you understand what I'm looking at there, let's go back to where we are and see what we're going to discuss here. So this daily candle is really, really attractive. All right. If it can close as it is, and I believe we already went lower here. You could see that. So this is not going to be a fractal. This level here, this candle, love this candle if it can close as is, because it'll be an indecision candle. All right. And then we're going to start looking to trade above that level. All right. And then you're trading inside this one candle, but it looks like you broke out with the wick. But I pay attention to these bodies. So let's see where this body closes today, and then look for our trading opportunity. Our trading opportunity, I want to more so find that on the 4-hour time frame. All right. And I'm only using Ichimoku for looking at market equilibrium, more like a pullback correction. You know, not even really a correction, because this isn't a super real trend. This is kind of sideways, really. It's just bouncing off the support level. But you had your trend here, and then you want to see the market correct itself, and then it could even violate that level after the correction. But it could even violate the level before the correction. It doesn't have to correct. All right. It could still continue to go lower, but we just have to prepare. So we prepare our trade. I look to enter the trade on the 4-hour time frame. So let's look at this. You can see divergence just kicking in all the way over from here on the 4-hour time frame. So when you look at the divergence, it started here, pretty much started here, and that would be pretty much where this low is. And then even when you go to this point here, you could see this. So look at that. We're going higher, and we're still going higher. But price was going lower and lower. But then now we might have found our flat, and then we go back. We got to be going the same direction with the indicator. And that will take the equilibrium away, and the market will change direction and maybe go to the upside based off of the support and resistance. I'm not trading the, guys, I am not trading the divergence. I'm just using that as a tool to enhance my trade, get a better, higher probability trade, because I have more things that are showing that there's weakness in the move to the downside. Now this is on the 4-hour time frame, so I want to see weakness on the daily time frame, which we don't see yet. All right, but we do see the support and resistance level. So if I'm trying to get into this trade, I'm not going to get into the trade on the daily. I mean, you could. Let's go back to the daily. You could, but I like to get in 4 hour earlier. So with this, if I'm going to enter this market, I'm waiting for the market to hold here, see if this candle holds, and then I'm going to wait for a candle to violate this level here. And then I'm going to have my stop loss just below this point, this low. Have your stop loss below the lowest low at that area. And then you're going to try to break that high, because the market, if you pay attention to the whole thing moving to the downside, you have a low, then you have another low. We violated the low. One for one, when you start looking at the market just on a trend, you could see that none of these highs were really violated, right? Still to this point, no. Didn't violate any of these highs. So what I'm trying to say here, when you start looking at the market one for one, see these highs? They never were violated. All right, so that signified the market didn't have strength to come back to the upside. But now look at this. All right, we kept violating the lows here. Kept on violating these lows, and we still violated this one a little bit right here. But now we want to see price violate that high right here. So we want to see price violate that high. That's where we're looking to get into the market. And then you'll have your flat Kijinsen. Now the market doesn't have to come all the way back to Kijinsen. It could come just maybe halfway and then drop back to the downside. We're not saying this trend is over. We're saying we're probably going to see a correction. All right. And the correction could take us all the way back up to this level. All right. So when I get into the trade, this is how you look at the daily time frame. When I get into this trade, I want to get into the 4 hour time frame. Oh, 1 second here. So if I'm getting in on the 4 hour time frame, most of my members already know where we're going to enter this trade here. All right. So we already have our bottom. So once the price breaks these levels, and then you could wait for a crossover. You could wait for price to close above your Kijinsen, because your Kijinsen is like your trend line. But to me, price follows the Tenkan-sen very well. All right. So that's where I find a lot of my trades. You bounce off Tenkan-sen. With any asset that I've been looking at or trading, I can find bounces to continue with the trade to the downside, all right, or to the upside, because look how well Tenkan-sen follows with price. All right, just another moving average, basically, but a little bit different settings. And then that's why the moving averages don't go flat like some of these flatnesses you see with Tenkan-sen and Kijinsen. All right, but now I'm going to enter the trade on the 4 hour time frame. Now currently you have an opportunity developing, but you don't have a trigger yet. So we have a level. We don't have a signal per se. All right, we're waiting on our signal, because the way we trade, we trade LST, which is level, signal, trigger. All three of those things. The third one gets you in the trade, your trigger. You find your level, we found our level. You find your signal, the signal's not there yet, and then you find your trigger. Now on the daily time frame, we do have a level and a signal. We have to wait for this candle to close, but if it closed as is, we have our level, we have our signal, and then we would have our trigger, and then we are into the trade. Then we base our stop loss on the low, a little bit to the lowest low, and then our target is going to be this level. But then again, we'll look at price action and see how far we're going to go. So your first target is going to be back to your Tenkan-sen. Then we're going to try to get back to this level, and then we're going to try to get up to the cloud, flat cloud, wherever. All right. And then you also have bottoms that are support and resistance levels. So look to your left a lot to find levels of support and resistance and move to and fro those levels. All right. But we do have your Ichimoku, which gives you levels. So pay attention to those too. All right. So that's what I'm looking at with this silver dollar. Hopefully that helped you guys out. Remember, wait for the trade. All right. You got your level. That's where you start looking to set it all up. If it doesn't go your way, don't be quick to jump in a trade, because the price may not go your way. So you want to make sure that you have all those things that I said: level, signal, and trigger. If you have those things, you're probably good to go. All right. But the main thing here, I always tell my members, trees that are slow to grow bear the best fruit. All right. So that means be patient. Wait on that trade setup to grow. Once that trade setup grows, boom, get into it. All right. If it doesn't grow or develop, why are you jumping into it? Give it a chance to develop. All right, guys. Hope that helps you all out. Until next time, have a great one, and God bless. So long.